my beautiful, beautiful friends. I missed you from this morning. Seriously, we have to talk. I'm going to stay calm for this video. I really am. I'm going to relax, take a deep breath, center myself, whatever that means. And I'm going to move forward here. Let's do this, people. So yes, my post-market wrap up on this Thursday. Lovely Thursday. December 9th, 2021. People, let me start off with, let's start off with the market. It always helps me to kind of zero in. Okay, maybe that's getting myself centered, So, Dow Jones Industrial Average, flatline. S&P 500, slight loss. NASDAQ took the biggest hit today. Okay, nothing major, even though, you're watching CNBC, you're watching Bloomberg, you're watching Fox Business, they're parading out the creatures, talking about, you know what? No, actually, you know what? Let's talk about it now. They're parading out these freaks, okay? And these freaks are all parroting the same thing, that there is a possibility that liquidity in the market is about to dry up. Therefore, we are going to have a serious stock market correction or something along those lines. They won't say crash. Okay. What are they talking about? Do they really believe? Look, what does this go back to? Okay. First of all, let me start off with the big duh. These people want you to believe that the driver here behind these markets, what is the driver behind the markets, people? Is it a booming economy? How about no? How do we know that? Let's see. Just in the last 2 weeks, we lost 400 and something thousand new jobs for first-time unemployment claims. You can't make that up. But we're doing so well, even though we got supply chain disruptions and we're finding out that real wages are cratering. We'll talk about that in a moment. So it seems that the narrative here is the stock market is going to fall into some kind of a liquidity issue because the Fed's really, and honestly, they're going to do it this time. They're going to stop buying assets, slow down dramatically, or both raise rates rapidly to combat inflation. We heard from the IMF today regarding inflation. Did you catch that one? We'll talk about that too. So look, it's more of the same crap, in my opinion. They parade out these people, the same story, if you notice, or stories are carried across all of the mainstream channels. And it's this today, the narrative is, it's a liquidity problem. Market's going to take a big, fat, ugly drop. I don't think so. I don't see it, people. We're looking at risk in this market. We're tracking the MMRI. We're looking at the yield curve, which is normalizing compared to what was going on just a week or two ago here with the dollar. Crude oil. Did you see what happened to crude today? Now, why would crude oil get hit today? Well, let's see. There's something going around called Moronic. Okay, the Omicron, it's whatever the freak it is. It's Moronic to me. And apparently this Moronic variant is expected to, get worse here. So they're now, what are they doing now? They're going to put travel restrictions on people. They're going to tell you where you can and cannot go. Really? You mean no free movement? Someone around here has been telling you that. No, they're not going to allow you to move around. They want to restrict your movement by any means necessary, moronic or not. Now, because there are expectations here that moronic is going to cause more restrictions, travel restrictions especially. Well, crude oil took a hit. Not going to last. Not gonna last, la-di-da, la-di-da, mark my words, people. Yeah. You see, one of two things could have just happened. Let me fill you in on that. Number one, I could have just freaked out. Or I could have done a little, little song and dance for you. People, I'm not well. Anyway, So let's move forward here. Cryptocurrencies today got hit. Gold and silver got hit. Crude oil got hit. Just lovely. Where's all this cash going to go? Well, in my view, it's going to find its way back into, obviously, it's going back into crude. It's going back into cryptocurrencies. And with regard to precious metals, who the freak knows? Okay, because we have another public enemy out here, people. It's JP Morgan. You know what I'm going to tell you. They're rigging the metals market. They're going to rig it to the highest order. They're not going to stop. Take advantage of that. Let them play their game. We will play our game. Okay? We are betting against the debt, becoming our own central bank. We are not going to stop doing these things. On top of that, we're going to be buying the dips in the stock market here, dips in crude oil, and we're going to look for every single opportunity that comes our way. I love it. I love when they play their games because you see, if they're going to do that, all we got to do is find a counter strategy. And we got that covered, I would say, in a big way. What I want to do now is, again, I was writing stuff down here, so I want to cover this stuff with you. I already told you that there is expectations, at least for now, that Moronic is going to cause more restrictions, travel restrictions and everything else. So that did hit crude oil. Okay, no big deal. That's the way it works. We've seen this time and time again with regard to other variants that just happen to pop up. Oh, and there's another one coming, in case you don't know. Soon. Relatively soon, you're going to see something else. It's going to be some other freaky name, too. There's also talk, again, about supply chain disruptions because of Moronic. I already covered that, too. All right, let's move forward. What else did I not talk about? Not. So how about this one? On the economic news front. Now, apparently we're doing so fantastic. Our economy is absolutely booming. What else did we find out today? That inflation is surging. We're now at about a 40-year high. We were just at a 30-year high just a couple of weeks ago, and it's going to be at a 50, 60, 75, and a century high very soon because it's not going to stop. So the talk today is, inflation, that's the problem, and real wages, the purchasing power that people have, regardless if they've gotten a little bump in pay by their employer, real wages are free falling because of inflation. It's going to continue to surge. Imagine Greg Mannarino's shock. No, not yours either, because you knew that. You know it's not going to stop, and I'm telling you that right here. People, look, you want me to say it yet again? Okay, I will. The Federal Reserve has less than zero intention of stopping what they are doing. That is running their inflation creation machine. What are they doing more specifically? Issuing debt through one door, buying it back through another door. Issuing debt through one door, buying it back through another door. And I've told you since time immemorial that this is massively inflationary and it's not going to stop, regardless of the liquidity issues that we're hearing about in the stock market. Like I told you, we're going to face a liquidity crisis and the market is going to crater. Oh, really? No, the Fed's not going to stop. Did you see what they're trying to do? They are parading these people out to try to convince you that the Federal Reserve really does care about inflation now that it's near 40-year high. And the Fed is actually going to taper. They are actually going to raise rates in a meaningful way. They are not going to do this. Okay? How many of you, you know what? I'm really curious, honestly. How many of you believe the propaganda from the mainstream that the Fed actually will taper? They did not taper. All they did was lower their targets, minimum targets per month. You know that. No cap. And the Fed is going to meaningfully raise rates to such a degree that we're actually going to see inflation reversed. Do you believe that is going to happen? Right? Yes, Greg. I believe. Or there's no effing way. Okay, that I'm in the no effing way camp. You understand? And I'd be willing to bet that you're in the no effing way camp too. Not going to happen. Absolutely not going to happen here in my view. So, real wages cratering, no surprise. This is a phenomenon that's been going on. So the IMF on the economic front too, I'm going to read this. This is a quote. The IMF sees inflation pressure, wait for it, increasing moving forward. So here we go. Yet again, people, flying in the face of the lies that we have been told by Yellowstone Powell. You remember this guy telling you since day one. They were lying to you about transitory, that it was going to go away. They paraded out, not only did they parade out Fed presidents, they paraded out some politicians too. Oh yeah, politician, rocket scientists who work for you. Oh, no they don't. But you knew that already. And what they're doing here is trying to get these people to convince you again that it was transitory. But you knew it would not be transitory because I told you it would not be transitory. Now we're hearing from the IMF that inflationary pressures are going to be increasing. Can I see your shocked face? I don't even know. Make it up, people. Make it up. You know, I want to cover one more thing before this video gets too long and people complain. Evergrande. Evergrande. Let's see. Evergrande is another thing that this guy has told you to ignore, despite the fact that, yes, there have been a few YouTubers out here going, ooh, that's the black swan. It's black swan. No! No! Stop with the shit, people, please. My email box. Evergrande, Evergrande, Evergrande. Evergrande defaulted. It's over. Run for the freaking hills. How about no? Let me explain to you what's going to happen here. Okay. Yes. Looks like I drove my dogs crazy. See, they're even laughing. See, that's dog laughter. Anyway, let's talk, you and me, about this Evergrande thing. So yes, there has been a default with regard to Evergrande. People are freaking out. And I think the reason is because they've all been afraid of something. I apologize for the dog. He's just trying to, that's Coco. He wants you to hear him. He's doing great, by the way. What's going to happen here is the creditors are going to take a hit. Okay, it's always the same story. Okay, it's the people that have loaned money or thought they were involved in possibly some kind of a good deal. That's why I'm trying to tell you people, debt, you want to own debt, you got to be out of your ever-loving mind, okay? No, you do not want to own debt if you don't have to, like owning a bond or something along those lines, because you're going to get screwed. They're going to find a way to restructure. It's what they all do, okay? And of course, the management is gonna you know get out of there with their golden parachutes. It's always the same thing. All right, people, look, a lot of important stuff here I covered here for you. At least I think so. I didn't keep the video too long. It's about 13 minutes right now. For those of you out here who do not have the attention span of a goldfish, I think you probably liked it. All right, look, love you a lot. Please share this video, get it out there, and I want to hear from you. Like the question I asked before, honestly, are you buying the dog shit from the mainstream, or are you just laughing your ass off like me? I'm out of here. See you tomorrow.